Let's talk about FOMO, the fear of missing out, in the wild world of crypto. It's a powerful emotion, a psychological phenomenon that can drive even the most seasoned investors to make rash decisions. We've all felt it at some point, that nagging feeling that we're missing out on the next big thing, the opportunity of a lifetime. But in the fast-paced, volatile environment of cryptocurrency, FOMO can be particularly dangerous. You see a new coin, a shiny new token, and suddenly everyone's hyped. Social media is buzzing, influencers are promoting it, and your friends are talking about how they're already making a fortune. The hype machine is in full swing, creating a sense of urgency and excitement. And suddenly you feel you have to act now, immediately, or miss out forever on potentially life-changing gains. The clock is ticking and the pressure is mounting. You start to imagine all the things you could do with the profits, the freedom and security it could bring. This feeling can be overwhelming, pushing you to abandon your carefully laid plans and jump headfirst into the unknown. This pressure is real, it's palpable, fueled by stories of overnight millionaires, tales of ordinary people who struck it rich with a single well-timed investment. These stories are amplified by social media, creating a distorted perception of reality, and headlines promising massive gains, sensational claims that grab your attention and promise instant wealth. These headlines often lack context and fail to mention the inherent risks involved in cryptocurrency investing. But here's the truth. Acting on panic, driven by FOMO, is often the fastest way to lose money in the crypto market. Impulsive decisions, made without proper research and due diligence, can lead to significant financial losses. For every success story that you hear, there are countless untold losses. Stories of individuals who lost their savings, their homes, and their financial security chasing the next big thing. These stories rarely make the headlines, but they are a stark reminder of the risks involved. From people who jumped in without research, without understanding the underlying technology, the market dynamics, or the potential risks involved. They simply followed the crowd, hoping to get rich quick, and ended up paying the price. Today, we're going to apply a critical lens to one of the most talked about projects in the crypto space, the Pi Network. We'll delve into its promises, its potential, and its pitfalls. Instead of panicking and succumbing to FOMO, let's calmly and rationally look at what it is, what problem it aims to solve, and how it proposes to do so. The risks associated with investing in Pi Network, the potential downsides, and the red flags that you should be aware of. And why patience, a well-thought-out strategy, and a long-term perspective are your best financial shield in the volatile world of cryptocurrency. My goal isn't to tell you whether Pi Network is a good or bad investment, a scam, or a legitimate project, but to give you the tools, the knowledge, and the critical thinking skills to make a smart, informed, and pressure-free decision about whether or not to invest your hard-earned money in this project. So, what exactly the Pi Network? What's all the buzz about? In the ever-evolving world of cryptocurrency, new projects emerge constantly, each promising to revolutionize finance or solve some pressing global issue. Pi Network is one such project that has garnered significant attention, sparking both excitement and skepticism in the crypto community. It presents a unique approach to cryptocurrency mining and distribution, setting it apart from more traditional cryptocurrencies like Bitcoin or Ethereum. At its core, it's a crypto project with the ambitious aim of making cryptocurrency mining accessible to everyone, not just those with specialized expensive hardware. The traditional model of cryptocurrency mining often requires significant investment in powerful computers and technical expertise, effectively creating a barrier to entry for the average person. Pi Network seeks to break down this barrier, offering a more inclusive and user-friendly approach to digital currency. The key to Pi Network's accessibility is its mobile-first approach. No expensive computers are needed, just your smartphone. This is a game changer, as it allows anyone with a smartphone to participate in the Pi Network ecosystem. The process is remarkably simple. You download the Pi Network app, tap a button daily to initiate a mining session, and earn Pi coins. It's designed to be effortless and unintimidating even for those who are completely new to the world of cryptocurrency. The app runs in the background, consuming minimal battery power, so you don't have to worry about it draining your phone. This simplicity is a major factor in its widespread appeal. It's simple and has attracted millions of users worldwide, creating a vast and engaged community. The network effect is strong with Pi, as the value of the currency is intended to increase as more people join and participate. But here's the catch, and it's a significant one. Pi is currently in what's called an enclosed mainnet phase. This is a crucial point to understand. What this means is that you can't trade or sell your Pi coins yet. They are not listed on any cryptocurrency exchanges. In fact, they only exist within the confines of the Pi Network app. They are essentially credits within a closed system. The Pi Network team has stated that Pi will eventually become tradable on open cryptocurrency exchanges. However, this will only happen after more decentralized applications, or dApps, are built within the Pi Network ecosystem. The goal is to create a robust and functional ecosystem before opening up the currency to the wider market. Furthermore, users will need to complete a Know Your Customer or KYC identity verification process. This is a standard practice in the cryptocurrency world, designed to prevent fraud and ensure compliance with regulations. As it stands right now, Pi's value is officially zero. It has no monetary worth outside of the Pi network itself. Therefore, any perceived value is purely speculative based on the future value. It's all based on hope for the future, on the belief that Pi network will eventually transition to an open mainnet and that Pi coins will then acquire real-world value. This unique setup, a cryptocurrency with millions of users but no current market value, millions of people holding a coin with no price tag attached to it, creates a fascinating dynamic. It fuels both the hype surrounding Pi network and the inherent risks associated with investing time and energy into a project with an uncertain future. In many ways, it's a grand experiment in community building and decentralized currency. Ultimately, no one knows for sure how it'll end. Whether Pi network will revolutionize cryptocurrency accessibility or fade into obscurity remains to be seen. A dangerous myth is that you need to buy Pi coins now from others before the price explodes. These are unofficial sales. The Pi team warns buying or selling Pi before launch can get your account frozen. Scammers prey on FOMO, showing fake prices or IOUs that aren't real coins. IOUs are just speculative promises, not actual Pi, and are extremely risky. The only legit way to get Pi is through the official app and daily mining. Don't fall for shortcuts. Buying Pi now is the fastest way to lose money in your account. In crypto, waiting isn't doing nothing, it's a smart strategy. By waiting for the official launch, you avoid scams and protect your money. When Pi finally hits public exchanges, the real price will emerge, not just hype-driven guesses. Waiting lets you see if the project delivers on its promises and if the technology actually works. You keep your options open and your capital safe for real opportunities. If Pi succeeds, you can buy it officially. No need to risk it all now. Patience lets you trade a little potential upside for a huge reduction in risk. In crypto, patience is your edge. Rushing headfirst into the world of Pi network, especially before it's fully launched, brings more than just the risk of losing money. It's like navigating a minefield blindfolded. You might think you're getting ahead of the game, but you're actually increasing your chances of stumbling into serious trouble. The allure of quick profits can be strong, but it's crucial to understand the potential pitfalls that await those who act impulsively. Scams are rampant in the unregulated pre-launch environment. These malicious actors are constantly devising new and sophisticated ways to trick unsuspecting users. They exploit the excitement and anticipation surrounding Pi network to lure people into traps that can have devastating consequences. If you send money to a stranger, believing you're investing in Pi or participating in some exclusive pre-launch opportunity, that money is likely gone for good. There's often no recourse, no way to recover your funds. These scammers operate in the shadows, making it incredibly difficult to track them down and hold them accountable. Sharing your personal information for unofficial trades or to access purported early access platforms is incredibly risky. This data can be used for identity theft, phishing attacks, or to gain unauthorized access to your other online accounts. By engaging in these unofficial activities, you significantly increase the risk of getting your Pi network account hacked or stolen. Once compromised, your hard-earned Pi coins could be transferred to someone else's wallet, leaving you with nothing. Violating Pi network's rules by attempting to buy or sell Pi before the official launch is a serious offense. The core team has made it clear that such activities are strictly prohibited and can result in severe penalties. Engaging in unauthorized trading can get your account permanently banned, resulting in losing all your mined coins. All that time and effort spent contributing to the network would be for naught. It's simply not worth the risk. Remember that any unofficial prices you see floating around are completely made up. They're not based on any real market activity or trading volume. These fabricated prices are often used to create artificial hype and manipulate people into making rash decisions. If you buy PI at an inflated, unofficial price, and the real price is significantly lower at launch, you stand to lose a substantial amount of money. You'll be stuck holding coins that are worth far less than what you paid for them. Acting solely on hype and FOMO, fear of missing out, means paying a premium for nothing but empty promises and speculation. You're essentially gambling your money on an unproven asset with no guarantee of future value. Waiting for the official launch allows you to see the real market price determined by genuine supply and demand. This gives you a much clearer picture of the true value of PI and allows you to make informed decisions. Patience and caution are your best defenses. Waiting for the official launch protects you from these traps and allows you to participate in PI Network in a safe and responsible manner. Don't let FOMO and the allure of quick riches turn a small, calculated risk into a total and devastating financial loss. A measured approach is always the wisest course of action. Crypto history is full of projects that hyped big and crashed hard like BitConnect and countless failed ICOs. These projects promised huge returns, but most ended in disaster for early investors. The lesson? Hype and urgency are red flags. Real value comes from working products and transparent development. Bitcoin and Ethereum succeeded through years of building, not pre-launch marketing. PI's model is different, but the psychology is the same. Don't get swept up in the crowd. Ask tough questions. What's the real utility? Is progress transparent? Learn from the past, don't repeat old mistakes. Stay grounded and analytical, not emotional. Interested in PI? Great, think like a smart investor. Get info only from official sources, ignore hype and rumors. If you want to participate, use the official app. It's free, low risk, and you're not spending real money. Use this time to read the white paper, understand crypto basics, and prepare for the future. Knowledge is your best defense against scams. Manage your expectations. PI is an experiment, not a guaranteed payday. The project could fail, or PI could be worth little or nothing. Celebrate learning and participation, not just potential profits. Stay curious, not anxious. In crypto, patience is your secret weapon. The market rewards speed and hype, but real wealth comes from discipline and research. Patience lets hype fade and reality emerge. Utility and adoption matter more than promises. By waiting, you see if the project delivers, not just if it markets well. Patience shields you from scammers and impulsive mistakes. It turns you from a gambler into an investor. Waiting for PI's official launch is the smart, safe move. In a world obsessed with speed, patience is the ultimate contrarian and profitable strategy. Curious about PI? Approach it with cautious curiosity. Explore the app for free, but don't risk your money before the official launch. Never buy or sell PI through unofficial channels. This is your best protection. Use this time to learn about PI and crypto in general. The knowledge you gain now will help you with all future investments. Stay calm, rely on official info, and don't let hype rush you. Participate for free if you want, but keep your wallet closed until it's safe. Success in crypto isn't about speed, it's about smart, patient decisions.